Mr. Richard Meddings, thank you very much indeed for joining us. So, as your CEO said today, you have income up, profit up, deposits are up, and lending is up. Going forward, can you talk to me about the obstacles in sustaining this kind of performance?
Well, the key underpin to our performance is the geographies that we serve. So we're a bank that provides banking services to Asia, Africa and the Middle East, and those markets still have strong economic growth and strong economic fundamentals. We believe we continue to grow the bank at double-digit income growth. We can invest the income capacity or the cost capacity that creates in further building out the franchise, and therefore continue a virtuous spiral of profit growth on a bigger franchise, delivering double-digit income growth.
It's interesting you say that the performance is very much underpinned by the strong economic growth that we've seen in emerging markets, particularly Asia. So I'm wondering if you're concerned at all by overheating with China's economy.
I go to China quite often. I think when I go there, it's very interesting to see the pace of underlying economic growth. I think the fundamentals driving China's economy, whether it's demographics, whether it's education, whether it's infrastructure, these are very strong factors. And I think China is a market where you may see asset bubbles, but China itself is not a bubble economy. And we believe actually that it has very good underlying resilience, particularly supported by very strong reserves, FX reserves.
You've also had problems, though, in a few large markets. India remains challenging, doesn't it?
Well, the important thing about Standard Chartered is that we're such a diversified business that in this first half, India's income was down. It was down about 12%, although the offshore income generated by the Indian franchise doubled. But the onshore business was down about 12%. But that was more than compensated for by 29% growth in Hong Kong, 20% in Singapore, 20% in Indonesia, 24% in Thailand. I could go on. But the point about the bank is we're very diversified, and as one engine slows, others go faster. And the net picture is a double-digit income growth.
But if we look at India a little more specifically, we have interest rates rising. The central bank has actually hiked rates, 11 times now in the past 17 months.
Yeah.
And also increasing competition from local and foreign banks, hurting margins. Is it difficult to maintain your confidence in that market?
We remain very committed to our Indian franchise. It's a large part of the Standard Chartered Group. We employ 18,000 people or so in India. You're quite right to point out that some of the macro indicators are showing some slowness. You've got issues of governance, you've got high inflation, and therefore, quite right, the 11 interest rate rises in the last 17 months. So one needs, I think, as we are, to be watchful of the underlying Indian economy and growth rate. But medium term, India remains a very good market for us to be the leading foreign bank in.
But some of the challenges that you outlined there with regards to India, they don't appear to be short-term problems. So how difficult is it going to be to turn things around for the business there?
The main cause of the fall in income in India was corporate finance income. And there it was simply a smaller number of large transactions. But we remain strongly invested in India. We are growing our distribution network. We are remaining invested in building out our equities platform. So the bank continues to put in place those foundations which will underpin very good forward growth in that market.
Yeah, so a weak spot now, but you're taking the long-term view. When do you think India might actually become a driver in profit and income growth?
Well, it's been a wonderful driver of both income and profit growth for many years. This first half is the first half for some time where we've seen some slowdown. But as I say, it's been more than compensated for by excellent growth in so many of our other markets. We don't tend clearly to give forecasts forward. We've said that we're more watchful of our Indian growth for the moment. We don't expect a strong rebound in the second half. But medium term, we remain very committed to what looks an excellent market.
What will be the knock-on effect of the euro area and US debt crisis on the Asian markets and then ultimately your bottom line?
Well, if I take those two questions in reverse, first of all, the first order consequence to Standard Chartered is minimal. We have no sovereign exposures to Portugal or Italy or Ireland or Greece or Spain. Our sovereign exposures to the European Economic Area, 30 sovereigns, is absolutely immaterial. So actually the first order consequence to us is minimal. But the world is one place, clearly, and is interconnected. We don't believe Asia is decoupled. So if what we see from current pressures on whether the US or the Eurozone is a knock-on to global growth, clearly that impacts on Asia's growth, and clearly that will impact over time on Standard Chartered's prospects. But it's part of the fact that we live in a global economy.
And how do you plan to alleviate the impact, the effect? I know that you say that there is no immediate exposure, but as you say, the indirect exposure that comes from the difficult conditions generated from these debt crises.
By staying with a very good strategy. Our strategy remains geographically focused on those growth markets, Asia, Africa and the Middle East. It's a strategy underpinned by being a universal bank, offering a full range of wholesale banking, underpinned by a full range consumer banking business. So we cover the full breadth of banking services. And because of the underlying growth in our Asian footprint, where GDP growth rates are materially above 5%, and in India over 7%, and in China up to 9%, we have very good underlying growth that we can service. That produces strong income growth. We take that income and we invest it in building out the franchise further, therefore generating further profit growth. The strategy will simply continue.
You've spoken a great deal, of course, about the importance of Asia, the economic growth in emerging markets, to your company, to Standard Chartered. So I'm wondering then about future plans to list in Shanghai.
We're clearly looking at that very hard. We would be very keen to be in the first wave of companies, international companies, that do execute on a listing in Shanghai. We are at quite an advanced stage. I'm talking to the regulators and the authorities in China about doing that. I wouldn't anticipate that happening certainly before next year, but we are well advanced in preparation if we were to be one of that first wave of companies.
But in terms of a timeline, sometime next year?
At earliest, I think sometime next year.
Mr. Richard Meddings, thank you so much. Great to talk to you. Appreciate your time.
Thank you very much, Maryam. Thank you.